Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, February the 4th, the year's 2021. Let's talk trading. Looking left. Trader wanted Walmal and I to discuss looking left a little more in depth. So we're going to do that today. But first, I want to remind you, these videos for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, looking left. I'm going to put up the simple sweet spots indicator chart here. And you want to tell the boys and girls and non-binary traders what you look at when you look to the left?
I just look left just to see if there's been places on the chart where prices had problems in the past. It's just that simple. And what I mean by problems is price got to a certain level, and for whatever reason, when it got to that level, it decided that it wasn't going to continue in that direction and maybe start to range. Some people call that consolidation. It just places where price went to a particular area. And I find those places to be, they're very, very informative for you because, one, let's say, if you look on the chart, I don't know which chart you have up, but if you have like the hourly chart.
That's what I have.
Great. So we see that huge candle that went up. That was because of news that came out at 8:30 this morning on the U.S. economy in terms of, I forget what it even was. But
no, it was on the pound dollar. It was British news.
British news, right. And so it drove the pound up, And so, but if you look left, if you look right at where the day opened, lots of consolidation at that area. And, it's the type of thing where, if you would have taken that trade at the bottom, if you were lucky enough to get in and, and take that and drive it up, I'd be looking to the left there and I'd be saying, you know what? That's a place where there's a good chance that it's going to go and stall out. Now, it didn't because there was so much momentum, it went and blasted through it. But now, if over the last hours, this hour, and the beginning part of last hour, or the ending part of last hour, you can see that it looks like it's petered out on its drive up, and it's starting to come down. Now, it may be just resting before it goes and takes another ride up. I don't know. But what I see though, looking left again, is that they got that consolidation zone over there again. It's that tends to be like a magnet, something that's going to draw price to it, and then it'll sit there for a while. And that very well may do it, it may not, but that's what I mean by looking left. It's sort of like there are areas on the chart where price had problems in the past, and knowing that it had problems in the past, okay, if I'm in a trade and I'm going towards that, when I get there, you know what? If I got pips in the bank, I got money, not pips in the bank, but I got pips on the table, and maybe it's a good idea just to go and drop out, get out of there, and just take the money that you've earned. Because what it can also do when it gets to that point is turn around and jet right back up again. So why not? Why go and take that chance? The other part about looking left is that when you go and clear an area of consolidation, or you'll clear an area where there's been problems in the past, there's a good chance that there's going to be some type of it's going to take some type of momentum to get through it, and there's usually some type of follow-through as well as it gets through it. Now, it may not happen on the 1-minute chart, but it will, more than likely will happen if you look on the 1-hour chart, where it cleared that area. We went up another, 40 pips from there. I mean, that could have been a really nice trade, and and that's just what tends to seems to happen. So I'm just looking for those areas on the chart. I'm looking for places. I'll go up to the H4 chart, and when I look on the H4 chart, I start looking. Okay, where did price have problems in the past? Is there problems there that or areas where things got rejected, and it's, I'm looking at the H4 now, and, if we look at the 83 level down to somewhere around, I guess 76, somewhere in that area right there, well, we've had like 3-4 H4 candles that went up there, put in a high, and then came right off of it. Or it put in a low, it came right off of it. That tells me that's a zone of concern. That's an area where the price reacts in that area. Well, we just came down and through that area. More than likely, it's probably going to come right back up and test it again. Or it may continue to come and drop. Right now it looks like it may go back up and test it just to make sure. Yeah, we really don't want to be there, so we're going to go and get out of there. And I just try to go and mark those areas out on my chart and say, you know what? If I got an area of concern, and let's say I'm taking a Walmal trade, and I'm right there in the middle of that area of concern, maybe this is not a good time to go and trade. Maybe I'll go and wait till next hour and just let the market figure out what it's going to do. And you think about, what happened during that British news that came out, that was on Forex Factory, that was a red flag news event, and me personally, I try not to trade red news events just because, the problem is that there's so many times that there's market manipulation and stuff like that happens, and they'll drive, they'll put out news and it goes the opposite direction of what you think it should. And, to me, it's almost like, more times than not, it's a fool's game where you get in late and you wind up getting into a momentum, and what happens is, yay, I'm up 10 pips, I'm up 15 pips, and in a flash of an eye, it just flashes back down 40 pips in the other direction, and you didn't even have time to get out with your profit. You actually get out with a loss. So I personally just don't do it. I say, you know what? There's still lots of money to be made because, if you look at the chart, you'll see that, it ran all the way up there. And then the news kind of settled and consolidated a little bit, and then it continued its momentum up. And it's sort of like, well, there's another area I could have gone and traded. And, and I wasn't taken out because of some type of flashback that just literally just banged me out of the market or banged me out where I had a loss that day so big that, my trading plan says no more trading for the day. So, that's just what I do. So now I'm looking at this and looking at that huge candle. That huge candle on H4 where, I don't know, the range of that candle is something along the lines of, 130 pips, something crazy like that. One of the things I know is that, that's, TRO talks about all the time being, return bars. That's a huge return bar. That's something that probably price is going to want to go back and revisit it. And we can see that it's actually revisiting it. It's coming back down. It's filling that candle in a little bit, because when price moves up that quickly, there are a lot of guys that got caught short down there in the bottom, and they got to get rid of their trades. So, and if you're an institutional buyer, you're sitting down there with trades down there. They don't go and usually trade with stop losses like you and I do. They've got enough money sitting in the bank that they don't need to do that. But what they'll do is they'll go and put in a bunch of sells up there at the top just to push the price back down so they can get down there close enough where they have an acceptable loss and or even breaking even. And that's kind of how markets move. Hopefully that helps a little bit.
Yeah. Now, one of the things that I like to tell traders when you look left is look at how many times price closed within a sweet spot line. And you can see here, for example, up at the top here on the H4, above 1375, you have it poking through there 4 times, but did it close up there? No. At the 3740 area, it closed above it once, it closed above it twice, but it poked above it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times. Well, actually, this wasn't a poke above, so 10 times. So what that's telling me is you might want to think about getting short here. Of course, everybody's going to go, oh, that's hairy hindsight. Now, well, that's easy to see. What about right now? Well, if you look at right now, we're between 80 and 90. How many times did price actually close in this 80 area? Well, we have once, twice, 3, 4 times. So out of how many candles? 1, 2, 3, 4, 5, 6, 7, 8, 9. Out of a whole bunch, probably 20 or more. And this is at the H4 level. what's that say? It means price for some reason doesn't like to be between 80 and 90. As you mentioned, I think in a video, how when you trade one pair, you know how it moves, and you know its tendencies. You can start to read it like the back of your hand, and you look at it, you go, well, wait a minute, price doesn't like closing between 80 and 90 on the pound, so let's just get out. Because right here, if you come down to the 35.80, you can see we had one close there, 2, 3 closes, but we had it inside there 1, 2, 3, 4, 5, 6 times. So price just doesn't like being in between 80 and 90 on the pound.
It just likes to get out of there. And you can take that to your advantage too, because the other thing is the type of thing where you see that it gets up there, and if you get another signal that says go short to go back out of the bottom of it, well, take the short, and maybe you only get 3-4 pips on it. But that's 3-4 pips, and that's how you can go and play that. Is that okay? We're between that 80 and 90. We've poked up into it. We're like 4 or 5 pips in it. Okay, that doesn't mean as soon as you're in there 4 or 5 pips you immediately go short. No, that's not what we're saying. We're saying, okay, you're in there. Now start looking for a signal that tells you that the market is starting to turn around and come back out. Go down to a lower time frame. Look for something that's going to go and say, hey, this is a place where prices turn around and it's now starting its descent back out, and then jump into that signal and take it.
Yeah, and the other thing is, I just switched back to H1 so you know, Walter. I just want to tell the traders, if you hit Control F, you'll get the crosshairs on your chart, because sometimes people say, how'd you do that? Because my mouse has that little scroll button, and if you press down on that, that will also give it to you. And if you left click, it goes away. But if you use this, and so you can see here at the 60, because Walmal likes to talk about price just seems to just react between 60 and 70. It just, and you can see here all these bars that are between 60 and 70. And I like to say, hey, when price gets to 40, it likes to launch. So when price was moving up during the news, I was calling out to Walmal. I said, hey, it's in the 40s. It's in the 40s. How many times did I call that out today?
Oh, a bunch of times.
And then they went from 40 to over 90. That's 50 pips. But how do I know to call it? Because I've seen it before. You go back to a couple of days ago, and price once again went through the 40, but it got back up to the 40, and what did it do? It ran up to the 80. It dipped its nose down into the 40s here again, and it ran up to the 70s. It dipped again down here, came back to the 40s, it ran up to the 60s. Back to the 40s, up to the, almost to the 60 again. And I just noticed it does that over and over again. So by looking left, I go, okay, when price gets to the 40, I'm just going to put the long on. It's almost like a no-brainer to me. I don't even think about it.
Yep. I do the same thing. The only difference I do is I'm a little bit more conservative with it. I look for a clear reason to go and do it other than just do it. But the thing is, I think you're going to be right more times than wrong if you just go and do it, because it's just what it does. It does it so often, and so often it runs right up to that 60, those 60s, and it just likes to consolidate in those 60, in that 60 area. Has lots and lots of problems there for some reason.
Yeah.
And so it's the type of thing where I like to go and say that the 60 line is a magnet, from the 40. And it can go either way. It can go, I've seen it go where you're in the 40s and it launches down. Not nearly as often. Most of the time it launches up from the 40s. But, the reality is that 60 line just acts as a magnet to bring the price into it. And it just draws it in more times than not.
Yeah, and the one thing, Walmal pointed out a difference between how he does it and how I do it. It doesn't matter, because he could put the trade on and do everything, get his confirmation, and it could tank. I could put the trade on just because it's there. It could tank. On the other hand, it could go up. And that's just trading. It's not something that's guaranteed. And the fastest 15 minutes in trading is up once again. So fellow traders, I hope that gives you a clue on what to look for when you look left. Because just remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.